Okay, so if you're a business leader right now, you're hearing all this buzz, right? This constant chatter about a potential AI bubble. And look, it's enough to make anyone a little nervous about where to put their money. But what if all this bubble talk is just the wrong conversation to be having? Today, we are going to cut right through that noise. We're going to show you why focusing on real, practical AI adoption is absolutely the smartest move you can make, no matter what the market hype is doing.
And here it is, the big question, the one on every leader's mind. You see it, I see it, money is just flooding into AI. Everything from chip makers to brand new startups, and a lot of the time it's happening before there's any clear return on investment. And whenever hype starts to outpace reality this fast, that word bubble, it just starts echoing all over the place. It's a totally legitimate concern, and believe me, it is already making real waves.
And yeah, this is not just theoretical chatter. We're seeing major outlets like Reuters tying actual market dips directly to AI bubble angst. This headline right here, it proves that this conversation is hitting investor confidence, and it's hitting it hard. So the first thing we have to do is draw a very clear line in the sand. We need to separate the financial market speculation from the technology's actual value.
This right here is the fundamental split we have to understand. On one side, you've got the investment hype cycle. On the other, you have the real, measurable utility that the technology offers. And let me be clear, they are not the same thing. Confusing the two is probably the biggest mistake a business can make right now.
You know, when people get scared about a bubble bursting, what they're often picturing is something called a market correction. Basically, a stock price drop of 10 to 20%. And while, yeah, that's definitely painful for short-term investors, it's a pretty natural part of the cycle, especially in new tech sectors. The key thing, the really key thing to remember is this. A market correction is about readjusting financial expectations. It is not a final verdict on the technology itself.
This is the perfect way to see it. Think of it as two separate conversations happening in two different lanes. In one lane, you've got all the bubble talk, stock prices, funding rounds, market fear, all that stuff. In the other lane, you have the technology itself. What can it actually do? How does it make things more productive? What are the tangible real-world results? Now, as a business leader, you can only really control one of these lanes. Your focus has to be on utility, period.
And you know what? To understand why this distinction is so crucial, we don't even have to guess. We have a playbook. It's from just a couple of decades ago, and it gives us all the answers we need. So it's time for a quick history lesson from the dot-com era.
Oh, you remember this, right? The late 90s. Any company that slopped a .com on its name was suddenly worth billions. The hype was just unbelievable. And then, boom, the crash came. Between 2000 and 2002, the market completely collapsed. Companies vanished, seemingly overnight. To a lot of people, it really looked like the entire promise of the internet had just been a fantasy.
But here it is. This is the single most important lesson from that entire crazy period. While the market was in total chaos, while companies were going bankrupt, and while the headlines were screaming that the digital dream was dead, the internet itself, it never stopped working. People didn't stop sending emails, businesses didn't stop building websites, and why? Because the underlying technology was just too darned useful.
So what made it through that firestorm? Well, the truly transformative technology, of course, and the companies that were built on strong business models and real-world utility, not just speculation. You know who I'm talking about. Companies like Amazon and Google, they didn't just survive, they thrived because innovation didn't stop. It just got smarter, more focused, more disciplined, and ultimately way more valuable.
And that brings us right back to today. Because the exact same principles that guaranteed the internet's survival are the same ones that are going to guarantee AI's staying power no matter what the market decides to do.
Just like the internet back then, AI isn't some far-off promise for the future. It's already here, running the systems we depend on every single day. Its fundamental value, driving efficiency, automating boring tasks, making sense of massive complexity. That value is completely independent of stock market swings. That utility is what makes it so incredibly durable.
And look, this isn't some abstract theory. AI is already detecting fraud in finance, it's improving medical diagnoses in healthcare, it's optimizing entire supply chains in manufacturing, and it's powering the recommendation engines we use all day long. It's already mission critical. This is not a technology that can just be switched off.
So knowing all this, what's your smartest move? How do you sidestep all the hype, but still grab the massive opportunity? Well, you need a practical, disciplined playbook.
Here it is, your simple 3-step playbook. First, focus only on value. Ask the hard question. What measurable productivity gain is this tool actually giving us? Second, monitor and adjust. Relentlessly track your performance and be ready to pivot your strategy based on what the real data is telling you. And third, and maybe this is the most important, ignore the noise. Build a wall between the short-term market drama and your long-term strategic vision.
So at the end of the day, this is what you need to remember. The technology itself will persist. A market correction might expose some weak business models that were built on nothing but hype, sure, but it won't even touch the real utility of AI. That core engine is going to keep running, and the smart, focused businesses will be there to harness it.
So the question you really have to ask yourself is this: is your AI strategy built on sustainable value, or is it built on speculative hype? Because the answer to that question will determine whether you get tossed around in the waves of market noise, or if you build a business that actually thrives because of this incredible technology.